Good morning, everybody. Hey, welcome to Thursday, July 22nd. I hope that your week is going well as we have today and tomorrow, and then we get to the weekend. So, with that, remember, there's only one thing that any of us can control. We can't control the markets, whether it's a commodities market or the stock market. We have no control over that. But what you do have control of is how much risk you have in your current portfolio. And the issue is if you don't know what that number is, how can you protect yourself? Give us a call, 863-382-0037, and let's walk through a financial x-ray and x-ray your current portfolio to make sure that you don't have too much risk. Again, that number is 863-382-0037. And with that, we have Dave coming up next.
Good morning. Hey, I'm really glad you're here today. Appreciate you greatly. It's 8:39. Time to check in on your money and see what's going on in Wall Street. What we talk about here matters. You got a savings account, it even matters a little bit. If you got a 401k or an IRA, it definitely matters because this determines how your retirement goes. Let's check in with Statler Financial Services, Phillip Statler, who's on the phone this morning. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. It's Thursday. Man, it's just every time I look at the calendar, I just can't believe how fast this year's just screaming by today.
Absolutely. I mentioned yesterday with me missing half of the month, it's going by even faster. I can't believe the 22nd of July. I drop my false teeth every time I look at the calendar. Data dumps out of the government kind of gets shadowed by the number of reports we've got for the early stage of earnings season, so let's get right to it. The unemployment picture, always the big thing on Thursday. First-time jobless claims, 419,000. We're staying low, but not as low as the market thought, I gather. Huh?
No, we've bridged back over that 400,000 mark, Dave. They expected about 348, maybe 350. So that 419, that's a substantial difference there. And we did see the future start to go negative when that happened. And so then continuing claims, not really, when you take rounding into effect, it was basically the same. It dropped a little bit, 29,000 claims, continuing claims, less. But in round numbers, it's about the same as it was last week.
Yeah, kind of a kiss in your sister story. Did they give any idea, or did anybody come out with a column suspecting the idea as to how we managed to eke upward on the unemployment claims? I mean, we had the panic over the masks and everything out in California, but we really didn't have any economic events that might have indicated it over the last 2 weeks.
No, we really haven't. And I have not seen any headlines or nobody's come out with any verbiage yet to kind of give a reasoning why. I did see that they did revise upward last week's by about 8,000 first-time claims. So that was a little off compared to what they had originally reported.
Okay, for the moment, we'll call it a slight bump, but not the indication of a trend, but certainly not the direction we had in mind. The other data dump point that came out was a release from the European Central Bank, and I kind of see them as a canary in a coal mine because their economies are a little more fragile than ours. The central bank over in Europe, our Federal Reserve has been buying bonds like they're going out of style. About the time they start talking about tapering off on that program, Central Bank of Europe says they're reauthorizing another $1.85 trillion in bond purchases in order to keep the European economy going. They're obviously a little more nervous over there than we are.
Well, I think so. I mean, they tend to close things down a little quicker than we do. And they're battling. I mean, we're battling things here too, besides COVID. They've got floods over there that are giving them some issues. We've got forest fires over here. So we're all battling different battles right now. And so they're trying to make sure that they can keep their economy going and not tank.
Oh, yeah. They're pouring a lot of money in to make sure. Otherwise, I did find it interesting that they were terming it just pandemic relief measures without mentioning all the flooding. And anybody that hasn't been following the news, it looks like half of Germany is underwater over their river flooding issue. And that's bad for a major industrial trade partner of ours as well, outside of sympathy for the humanity.
Yeah, yeah. Well, it makes it hard to get stuff out, right? So that's we'll have to see. I'm hoping that kind of gets resolved here shortly, and we can get those guys back up and running over there.
Absolutely. Last couple of days of Wall Street have been really good. Yesterday was up on the Dow by 286 points. Nasdaq was up by 133. S&P was up by over 35. And well, I kept reading last night that it was on the strength of the good start to the earnings season. Based on this morning's reports, we aren't even getting that level of euphoria. It sounds like. What do we got for reports this morning?
You know, we've got some misses today that are significant. The biggest one is Netgear. Netgear, they missed. They had lower than expected sales, lower than expected profits, and they gave guidance that fell short of what everybody expected. They're blaming it on the supply chain being an issue, constraints there, factory closures during COVID has hindered their performance, which is what we're getting a lot of these days. But they missed kind of on the trifecta there, so they're down almost 15% this morning, Dave. Down $5.44 to $31.62 right now.
Wow. Now they aren't very charitable when you miss on all three, are they?
No, definitely not. Definitely not. Another miss that we saw was on Southwest Airlines. Southwest Airlines lost 35 cents a share, which we expect them to lose money, given what they've been through. All the airlines, we expect that. But it was more than the 23 cents that were expected. Revenue did beat, though, and they've given a pretty decent outlook for what's happening. They expect to be profitable for the remainder of the year. But they're still not feeling the love this morning. They're down about 2.25%.
We didn't have the numbers specifically out of American, but American Airlines painted the same picture, losing money, but brighter outlook for the rest of the year. So we're kind of getting a picture out of the airline industry already, aren't we?
Yeah, we are, and that's we would expect that, just like the cruise lines, we would expect that out of them, and just like I've got a resort, Las Vegas Sands. They lost 26 cents a share. Again, 10 cents more than what was expected. For them, though, revenue fell short also, and it still believes that it's going to rebound and travel's going to come back, and they're going to be in better shape by the end of the year. But they're trading down almost 3% this morning. So I think that's my main losses for the day in terms of missing their numbers. I do have let's say a big winner today, and I'm
We'll
going to
take
say
it.
big winner is probably going to be Crocs. Crocs footwear. Yep, they beat by about 63 cents a share. Came in at it's $2.23 a share. Revenue beat forecast, and Crocs said it's seeing strong demand for their brand, not just here in the United States, but across the globe. I saw another headline that said that they had record revenue this quarter. So all things are going well right now for Crocs, and they are up 12.1% right now. Their 52-week high before right now was $121. Right now, if it opened, it would be $134. So they're going to open up with a new 52-week high this morning.
The new way to play, you want to be a millionaire. Invent an ugly shoe.
That's right. It's it's something else.
One more bit of good news for us.
Let's talk about AT&T. They reported they beat by 10 cents a share. Revenue also above projections. They had a great quarter. They added greater number of wireless subscribers than they were expected to. They saw a bigger jump in signups for their various HBO services, more than expected. So good things are happening for AT&T. They're up 0.9% this morning to $28.15 right now.
Given the growth in the satellite end of that service, anybody that predicted the end of DirecTV, maybe the rumors of their demise were exaggerated, huh?
Well, it could be. I know that they're still having issues with, everybody's competing against the streaming services. So,
Yeah.
so what did they do? AT&T took what they do with DirecTV and created a streaming service.
Oh yeah. Anybody that hasn't gotten emails from them, you just haven't gotten right on the spam list yet, right?
Yeah, exactly. So
It's
yeah.
resetting the table for the morning. We start out with another big update yesterday. Pretty much all the losses we had between Friday and Monday and are now pretty well gone. Dow back up to 34,798. The S&P is right bumping its nose on a record at 43.58, and the Nasdaq is at 14,831. Big ups yesterday. If the disappointment of the jobs weren't there, the S&P would probably be looking at opening at a record. Doesn't sound like it's going to at this point. Where are we 45 minutes early?
We got more red ink to talk about today as we start out the day. And the question will be, how do we end up the day? That's what's most important, right? So that right now the Dow is down about $36, which is a tenth of a percent. The S&P 500 is basically even right now, and the NASDAQ is up a tenth of a percent. So nothing really catastrophic there. We flip and look at the commodity side of the coin. We do have silver down 1/4%. Gold has, while we've been talking, it has gone green. It's up a tenth of a percent and still back over $18. $1,800, 1805 right now an ounce. The big change is going to be crude oil. Crude oil continues to disappoint us and stay below 70, which is not good for you and I. It's down. It's up 1/4% to $70.50 a barrel right now.
That's a major change from yesterday too. Did the inventory report yesterday afternoon bump it up? I didn't catch that.
So the inventory report actually should have helped us and not hurt us. The inventory was a little more than expected.
Huh.
So that's who
It
knows.
kind of got over a benchmark number I really don't like seeing back over 70. Overnight trading on the Asian rim, generally positive territory. Europe is kind of directionless this morning. The British markets are heading down. German markets are heading up fractionally. No big response to the European Central Bank's bond buying binge, it looks like. Phillip, how do I find you to be able to let all of these things roll into a stable ball and make my retirement something I'm going to be able to live with? How do I get an appointment with you?
You're right, Dave. The only thing that any of us can control is the amount of risk. We can't control the markets. We can't control the commodities, but we can control how much risk we have in our portfolio. To find out what you've got in your portfolio, give us a call, 863-382-0037. Catch our website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
And you and I back again tomorrow morning about the same time. Thank you so very much. I appreciate it, Phillip.
All right, buddy. Have a great one.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. From the pit.
Hey, folks, again, I want to thank you guys for joining us. I really do appreciate it. Remember, we're here. We want to serve our community. If we can help in any way when it comes to retirement, financial issues, please don't hesitate to give us a call. Go to our website. Schedule even a 15-minute phone call. Hey, have a great one. I look forward to speaking to you guys again tomorrow. Bye now.